Divis Laboratories posted robust Q2 FY2024 results, with revenue coming in at 2,302 crores rupees, surpassing the expected 2,215 crores rupees. EBITDA was also higher at 735 crores rupees, well above the expected 671 crores rupees, resulting in an EBITDA margin of 30.5%, slightly better than the 30.3% forecast. Net profit stood at 518 crores rupees, exceeding the anticipated 479 crores rupees. These strong numbers reflect improved operational efficiencies and cost management. However, we must continue to monitor whether this growth trend sustains in the coming quarters. Divis Laboratories is a pharmaceutical giant known for its unique business model, primarily as a supplier of active pharmaceutical ingredients, APIs, to major global pharmaceutical companies. This approach provides stability and consistent revenue. The company is well positioned to benefit from the China Plus One strategy as Western nations, especially under the influence of Trump's potential sanctions on Chinese goods, look to diversify their supply chains. Divi's diversified product portfolio and long-standing client relationships strengthen its strategic advantage. Currently, Divis Laboratories trades at a price-to-earnings ratio of 94.4, significantly higher than its historical median of 53. Although this valuation appears stretched, it could moderate as profit growth picks up momentum. Investors need to be cautious about paying such premiums. However, a promising turnaround in earnings could justify the elevated multiples. It is essential to keep an eye on earnings revisions and sector dynamics to gauge how valuation trends evolve. Over the past 5 years, Divis Laboratories has reported a compounded annual sales growth of 10% and a profit growth of only 3%. This modest performance reflects the post-COVID-19 slump in the pharmaceutical sector. During the pandemic, Divis saw disproportionate demand spikes for certain APIs, especially those used in COVID treatment. As these tailwinds have dissipated, growth rates normalized. The company now focuses on new product launches and expanding capacity, which may help accelerate growth. On the technical front, Divis Laboratories stock is trading near its all-time high of around 6,276 rupees, indicating a lack of substantial discount for new investors. The long-term support level lies at 5,450 rupees, which could act as a critical price floor during market corrections. Momentum is strong, but potential investors should be wary of volatility at such elevated levels. Always consider using technical analysis in conjunction with fundamentals when making investment decisions. Asian Paints reported disappointing Q2 FY2024 results. Revenue stood at 8,003 crores rupees, falling short of the expected 8,581 crores rupees. EBITDA dropped significantly to 1,240 crores rupees, well below the anticipated 1,565 crores rupees, with margins contracting to 15.5% from the expected 18.2%. The company's net profit of 695 crores rupees was a steep decline compared to the estimate of 1,079 crores rupees, a 42% drop year-on-year. The subdued performance reflects lower consumer demand and intensifying competition in the market, causing earnings pressure. With a market capitalization of 2,65,645 crores rupees, Asian Paints is the largest home decor company in India, dominating the paint and coatings industry. It's a market leader, offering a diverse portfolio of decorative and industrial paints. However, the competitive landscape is heating up with the entry of Aditya Birla Group's Birla Opus, increasing pressure on Asian Paints. This new competition poses a significant challenge, potentially impacting future market share and profitability if not carefully managed. Currently, Asian Paints trades at a price-to-earnings ratio of 52.3, which, although attractive, reflects lowered market expectations for growth. Historically, the stock has commanded a higher valuation premium, but recent performance setbacks have moderated investor sentiment. While the valuation now appears reasonable, it's crucial to recognize the potential risks, including heightened competition and reduced profit margins. Investors should weigh these factors before making any investment decisions. Over the past 5 years, Asian Paints has witnessed a sales growth of 13% and a profit growth of 21%, benefiting from a robust real estate cycle and rising consumer spending. However, growth has moderated, and the outlook remains subdued. Given the company's large scale and increased market competition, future growth rates are expected to be lower. The market is also closely watching management's strategy to sustain growth in an evolving and challenging business environment. On the technical front, Asian Paints stock is trading near its critical support level of 2,700 rupees. This support level has historically held firm, and a breach could signal further downside. The stock is trading at a significant discount from its 52-week high of 3,423 rupees, representing a correction of over 20%. Investors should be cautious as the stock is hovering around crucial levels, but long-term investors may consider accumulating if it bounces back.